Hey guys, so today's video is going to be on the solvency of exchanges, mainly Kraken versus FTX, and how Kraken is able to remain solvent in all of the measures it has in place to do so. Now, first, let's look at Jesse Powell. He's the co-founder and CEO of Kraken, and he posted an article today, 3 hours ago, basically outlining how Kraken manages margin risk on its spot exchange and all the different measures they have in place to do so. Now, a couple days ago, he was tweeting about Sam Bankman-Fried and highlighting exactly on this Good Morning America interview when Sam said that they weren't managing risk at FTX, even though they were dealing with billions of dollars. So he highlights how inept this is. Then a couple days later, posts this long article about how Kraken does that and all the different security measures they have in place to do so. So today, let's go over that and exactly break it down. So the first thing is finite resources, and this is something I love. It says Kraken has a limited pool of funds available for margin trading. Once that pool of funds is exhausted, subsequent orders calling for use of the margin pool will be canceled. So basically what this means is they have a limited funds available in their reserves for extending margin to clients. So if you try to place a margin trade and you get this insufficient margin here, it's not because there was a problem or technical problem. It was only because they had their limited amount of funds and those funds were exhausted, okay? But this will never prevent you from closing a spot position on margin. So this is basically saying that Kraken always ensures that it has a one-to-one for any type of margin it gives out and is not just giving you money out of thin air. So this is amazing and one of the reasons why I love Kraken. Next, it says per account and per asset limits. So no one account can borrow the full pool of funds for a particular asset. This decreases the chance that there will be one massive liquidation. Instead, the funds can be distributed across many users and strategies. So this is to protect basically, any person that's trying to take down a certain coin on exchange or manipulate the price for any reason. For DAI, you can only borrow up to 300,000, Dash 1,000, Doge 4 million Doge, and then DOT 35,000. So again, they spread out all the risk. They never have one single point of failure, and they have these risks management processes in place for that, which is amazing. Next, per market risk adjusted max leverage. It says margin trading is only supported on approximately 20% of the 600 pairs available on Kraken. The amount of leverage offered ranges from 2 to 5x and is defined per market based on volatility, liquidity, and other risk factors. So you can see here basically the max leverage for each of these currency pairs. And if you scroll down to BTC, you can see BTC has a max leverage of 5x on the USD pair, 5x for the Euro pair, but only 3x on the CAD pair, Canadian dollar pair, and then again 3x on British pound. So again, they have varying leverage amounts for different currencies and their different pairs, which is basically to help cover themselves and how much they can actually offer so they don't overextend what they actually have in reserves. Next, says limitations on what is accepted as collateral and discounts applied to collateral asset value based on liquidity and other risks. Only approximately 10% of the 200 plus assets available on Kraken have greater than zero collateral value. 50% haircut means 200% collateral required. Okay, so what exactly does this mean and what is a haircut? So a haircut, for those who don't know, is most commonly used when referencing the percentage difference between an asset's market value and the amount that can be used as collateral for a loan. So basically what that means is, say for Avalanche, there's a 50% haircut, okay? Well, you scroll down here and it says, for the collateral currency purposes, one token only accounts for 0.5 of that token towards your trade balance. And this accounts for things like liquidity, basically how much they need in reserves or how much of your reserves they need to guarantee you that collateral that you're using, okay? So in case a big liquidation event happens, then they want to ensure that one, it doesn't go to a negative balance because that's going to affect Kraken and that's going to go into their margins. And basically, they may not be able to fill everyone's order. So they want to make sure that they are covering that margin, that the collateral they're giving you. And therefore, if there's liquidation happens and say the price slips, to 0.6 or 0.7 of that coin, well, you already have one that you're holding for that currency as kind of collateral. So then that's going to be used and you're going to be able to cover all of that. So again, they are covering themselves. They have different haircuts for different coins based on liquidity and based on the volatility. But again, this is for basically extending margin to you and ensuring that they have the funds available if you do get liquidated for whatever reason. So again, that's something that's put in place. Next, index prices for liquidation. This is something that's great because it's something that happened with Mango about their oracle of how they looked at different index prices. And that's how I believe his name was Ave or Avil, he was able to actually manipulate that, and I think he stole over $100 million, or was able to trade, and the Mango company lost $100 million. But it says, by using external index prices to track account equity value and liquidation levels, we reduce the chance that a liquidation will be triggered by an anomalous event on a single market. So looking at exactly what index references they use, so you can see here, for most of the coins here, they use a CFB benchmark. Now, what are CF benchmarks? So CF Benchmarks is a cryptocurrency index provider, and it says our indices are underpinned by the most rigorous methodologies in market security. So the biggest thing here is, look, they're trusted by BlackRock, CME Group, NASDAQ. I mean, a ton of reputable people, ton of big companies. So basically, it's a conglomerate of all the different averages of prices based on volume-weighted price average, as well as, really reputable exchanges. And it kind of takes all those into one and gives you a true real price. And that's exactly what Kraken uses whenever they are calculating the reference price. Okay, so that's something that's very, very important, and something that's not basically susceptible to manipulation. Okay, next, market price protection. So speed bumps on liquidation. So it says, in a mass liquidation scenario, liquidations may be staged with pauses for liquidity to fill back in on the opposite side. This minimizes the slippage versus executing it all together at once. So exactly what does that mean? So it says it's a feature that protects market orders from filling at a bad price due to price slippage in an illiquid or volatile market. It will cancel any market order as soon as the bid-ask spread gets unusually wide, when the spread is 5 to 20% of the market price, depending on currency pair. So what does this mean? This basically means that, hey, if you're buying a coin at $8, if you market order and say it's having a huge pump, and the market order would have filled you, instead of $8, it would have filled you at $9.60, so 20% above. Well, it's going to actually cancel that market order and not fill you, okay? This is for your protection, so you aren't getting screwed by the volatility. Now, there's two things you can do for this, right? So one of the things here, it says you can place a limit order, and if they're not being filled as quickly as you would like, then you can actually raise the limit price for buy orders or lower the price for sell orders. So again, if you really, really want this coin and it's pumping that much in that short amount of time, place limit orders and hopefully those will be filled. So that's one of the things they use to protect their customers, and something I really love as well. Next, privacy for margin orders. So it says Kraken doesn't publish which orders in the order book are using margin. We also don't publish the total size of the pool for each asset, nor the utilization until 100% utilization is reached. This helps protect traders from predatory activity. So what does this mean? This means basically that they aren't publishing, hey, this guy here is, long 5x on Bitcoin from, let's say $16,000, right? Or $17,000. So if Bitcoin falls at a certain price, they'll get liquidated. So really, it's helping protect users that say, one big entity is trying to really, tank the price of Bitcoin on Kraken and try to liquidate this person to create a cascading effect. Well, they're not going to be able to see that, and therefore everything's going to look equal. So that's something I love as well. And then 8 out of 9, regular reassessment of all controls. So markets are constantly changing, and tolerances are defined for things like margin allowances, max leverage, collateral value, market price protection, and regularly reviewed to ensure that we're not extending more risk than we're comfortable. So again, they're adapting to the market, right? They don't just put one system in place and think it's going to work for the next 5 years. The market changes, the players change. There's big liquidation events, there's insolvencies of exchanges. Again, all these things they're taking into account so that they're able to fully adapt to the changing environment. Then it says real consequences for negative accounts. And this is what I was talking about earlier, how they're motivated to avoid accounts becoming negative due to a margin liquidation. That's because negative balances come out of Kraken's own reserves until they can be recovered. Are always optimized for solvency first. So again, that one where they have that haircut, right? How much collateral you're putting when you're extending that margin risk for them, so that they aren't susceptible to that liquidation margin risk. So, and last but not least, proof of reserves. They've done 2 in the past year, and this was before CZ even announced the proof of reserve or made it a big deal. CZ from Binance. So one of the things here, if you click on this, it says their commitment to transparency. So regular proof of reserve audits make it easy for clients to verify the balances they hold are backed by real assets, all with just a few easy clicks per account. So basically, if you scroll down here, it tells you how to do it. Now, their third party that they're using for these proof of reserves, all you have to do is in your account, go to settings, account, and then click the audits button here. So I'll expand it so you can see it. So it's audits button. And then it says your account will display recent audits in which your account balance was verified. So you can see 2 times in the past year. And the auditor is Armanino LLP. Now, who is Armanino LLP? Well, they're a huge company. They're the 19th largest firm nationwide. They have 68 NPS client satisfaction rating, which is over 2x the industry average. And they have over 7,000 clients served in over 100 countries. So Armanino is definitely a reputable person. They have done this, they're, plenty of times. They're not a new kid on the block whatsoever. So it's good to see that Kraken is using them, as well as consistently having their proof of reserves audited at random times, and therefore the clients and customers can see that if they go into their account. So again, something why I like Kraken so much. And again, I just wanted to highlight this because a lot of times people are, they're unsure what exchanges are really reputable, which ones have, those proof of reserves that are supporting their assets completely. So I'll say Kraken is probably one of the, 2 or 3 exchanges I actually trust. The other being maybe Coinbase and maybe Binance. That's still kind of up in the air. But Kraken is always shown, they follow the rules. They always put measures in place. Jesse Powell's done a great job. And again, I know he'll continue to do a great job, be very vocal about Twitter, protecting this space and the crypto space, and making sure that companies, follow the rules and basically don't screw the customers so that the customers end up losing a lot of money. So again, if you like this video, please give it a like. I appreciate all my viewers. If you haven't subscribed, please do so. And please comment if you have any questions or you enjoyed it. I really appreciate it. Thank you guys so much for watching. Till next time.